Do I have to pay taxes on my stocks? That is the topic of today. Let's get started, and don't forget to smash that like button and subscribe. Do I have to pay taxes on my stocks? Now that is a good question, but there's a lot of ways whether maybe you do or maybe you don't. So we have to figure out what type of situation you're in. Once you bought your stocks, have you sold any stocks yet? Say you bought a stock for $100 and it went to $1,000. You have $900 of profit. But if you have not sold this stock yet, this is what's called an unrealized gain. And you will not have to pay taxes on stocks that you do not sell. Once you do sell this stock, you will have to pay taxes on this stock. Now you're at $900 over here you're going to have to pay taxes on if you sell at that point. If you don't sell, you do not have to pay taxes on it. Let's look at it the reverse side. Say you buy the stock for $1,000 and it drops to $100. Now you lost $900. Now this isn't the end of the world. Yes, you don't want to lose money in the stock market, but if you do lose money, you can use it to your benefit. You don't want to just not report this loss at all. No, you want to turn in this loss like you would anything else. Like you'd turn in your W-2 at your job. Because now we can write off $900 of money you made, and this will get you more money back on your taxes. So a loss can some ways benefit you. Now let's talk about the next thing. Say I sold my stocks, but I didn't take the money out of my brokerage account. I didn't move it to my checking account or my savings account. It's still in my brokerage account, so really I shouldn't have to pay taxes on that. Yes, you do. Once you sell those stocks, it doesn't matter where that money goes. If you use the money to buy other stocks, once you sell that stock, you are subject to have to pay taxes on those stocks, on the profit that you may or may not have made. Now let's jump into one of the other really important topics is how long did you hold your stock for? Did you hold your stock for 1 year and 1 day, or did you hold your stock for 1 year or less? If you held your stock for 1 year in a day, you may not have to pay any taxes depending on how much money you made. If you made less than $40,000, say you're a college student investing on RobinHood or Etrade or Fadility or a brokerage account on anything, if you made less than $40,000, you won't have to pay taxes on your profits on your stocks, because this is what's called long-term capital gains, and there's different pay structures depending on how much money you make. If you made over $40,000 and a dollar to about $44,000, you are subject to 15% tax rate on all of your profits. So say you made $1,000, they're gonna want their piece, the government, of $150. So they always get theirs. You're gonna be reported. RobinHood, Etrade, they're gonna send the stuff to the government, so you can't hide out on it. I wouldn't recommend that at all. I'd recommend paying them, get them their money. What I usually do is I sell my stock and I use some of that portion of that money to pay them off. I don't take the money out of my checking or wherever. I just I sell a little bit of stock to give them their portion, and I let the rest keep running. Now the other hand, if you held your stock for not longer than a year, you are subject to short-term capital gains. And short-term capital gains are not as favorable. I mean, 15% sounded bad, but wait till you get over here on this side of things. It could be much worse. You're taxed at the same rate as if you made the money at your normal 9-to-5 jobs. And this can depend on a lot of different factors: marital status, what state you're in, how much money you made. But typically you're taxed at about 25 to 35%, somewhere in that range. So now if you made $1,000, the government might want $350, which is much more. It's not as cool for us. It's really a shame that us peasants, when we go make money at our normal jobs, we're taxed. Then we go spend money, we're taxed. Now we're trying to get ahead of the game. We're investing in the stock market. We're doing what we're supposed to do. Now we're taxed again. Always held down. You just got to keep on trying. You got to keep on fighting through it. And you got to keep on using your money and let it compound and let it keep making more money. It is true that you can make money with money. So you need to let that money keep growing. Let's talk about regular brokerage accounts, RobinHood, Etrade, Fadility, regular brokerage accounts versus a Roth. A Roth could be much better for younger investors. If you are younger, I'll just leave it at that, you should probably look into a Roth IRA. Now this is a type of retirement account where you pay the taxes up front. So say you open a Roth IRA on Fadility or another brokerage platform. You give them the money, they take the taxes right off the top, and then it keeps compounding every single year, up and up and up. And then when you go to retire, you don't have to pay any taxes. You get all the money. So it can be very good for younger investors. I would not recommend this type of account with a older investor, someone that doesn't have as much time in the market. So say you come in with $1 million and they take their chunk off the top in taxes, you might not make that chunk back by the time you retire. But if you're a younger investor and you have years in the market, I definitely would look into this. This can be a really, really good investment for you. Now let's talk about when you go to file your taxes. You can pull a 1099-B from RobinHood. You can pull this on either the app or the web version. You can pull your 1099-B. This should be available by January 15th every year, depending on any brokerage account you're on. You can pull that form. You can type it in just like you normally would. However you normally do your taxes, you can do it the same way. If you use TurboTax, I think it might put you in the next tier. If you could do it for free now, you might have to pay $30, or I think one year I had to pay $70 because I had to upload my 1099-B, so it can be a little more expensive, but it really is easy to do. On TurboTax, you can either log in with your username and password for any of your brokerage accounts and it'll pull all that data for you so you won't have to do anything, or you can get your 1099-B and it'll just say, hey, what's in square 2C or 23B or whatever, and you just plug and chug, plug all those answers in, and you can move on. Or you can give it to your accountant, your CPA, whoever does your taxes for you. They can do it for you, and it's just another paper. It's just another piece of the puzzle. If you have one job, it's pretty easy. If you have 5 jobs and you're a business owner and you have a brokerage account here and stuff over here, it could be a little more of a hassle, but it's just one more piece of the puzzle. I hope this helps. Keep on investing, and don't forget, smash that like button and subscribe. Thanks, everybody. Keep on keeping it on. If you know, then you know.